Hey guys, it's that Dividend guy coming at you with another dividend investing video. Hopefully everybody had a great green day in the market. Hopefully everybody made some money today. Today we are up about $11, so not too much to write home about. For the week we're up $141. The month we're up 131.43. The 3 month mark we're up $1,800. For the year we're up 20 over 2,000 dollars for the year, or excuse me, all time, we are up about $1,500. So overall, I think we're green on every single, yeah, green on every measure. That's awesome. So let's take a look at Realty Income. Dividend Aristocrat, one of my personal favorites, closed at 62.35 today. We have 15 shares. The market value is $935.25. Our average cost is $45.38. 4.26% of the portfolio is in Realty Income. That will go up. It is a monthly dividend paying stock, so I'm a big fan of it. Up $7.35 today, up $254.55, up 38% on Realty Income. Then we have a Dividend King and Altria, closed at 41.66. We have 148 shares, $6,100 in the stock. Average cost is $43.84. Today we're up $8.88. Total we're down $322.74, down about 5% on Altria. Then we have a Dividend King and Coca-Cola. It closed at $47.22. We have 20 shares at $944.40 as our market value. Our average cost is $51.26. It's about 4.3% of the portfolio. We're up $10 today, down $80.90, or down about 8% overall in Coca-Cola. Then another Dividend King and Federal Realty Investment Trust, FRT. We have one share. Our market value is $76.18. Our average cost is $113.40. It's about 0.03% of the portfolio, so a very small percentage here, which I will boost that up. We're down 44 cents today, down 37.22, or down about 33% on FRT. Then we're on to the next set of stocks. With Lowe's, a Dividend King, closed at $150.26 today. We have two shares, $300.52 is our market value. Our average cost is $100.86. Lowe's makes up 1.37% of the portfolio. Today we're up $1.18. Total we're up $99 or 40, pretty much 49% on Lowe's. Then we have AT&T, a Dividend Aristocrat. We have 68 shares. I bought a share yesterday. I made a video on it. We're at $2,000 of market value with AT&T. Our average cost is $30.97. 9.2% of the portfolio is in AT&T. We're down $10 today, down about 0.5%. Total, we're down $76.13, or about 3.7% on AT&T. Then another Aristocrat in AbbVie. It closed at $93.61 today. We have 60 shares even, about $5,600 of market value. Our average cost is $72.22. I bought this way back when they did an acquisition and they dropped significantly for it. Happy I bought at that price point. Our AbbVie makes up about 26% of the portfolio, which that will be going down. I know that's a huge percentage of the portfolio. But today we're down $40, about 0.7%, about 1.1% actually, because it shifted. Today we're up $1,200, or $1,261.64, up about 29% on AbbVie. Then we're on to 36912 with Target, a Dividend King, closing in at $129.37 today. We have 10 shares. Our market value is about $1,300 in Target. Our average cost is $87.68, and we have about 6% of the portfolio is in Target stock. Today we're down $10.80. Total, we're up $416.92, or up about 48% there on Target. Then we have J&J. Today it's a Dividend King. Today it closed in at $148.40. We have two shares. Market value is about $300. Average cost is $136. Portfolio, it makes up about 1.35% of the portfolio in J&J stock. Today we are up $236. Total we're up $25.22, up about 9.3% in J&J. Then we have 3M, another Dividend King. $155.35 is where it closed at today. We have two shares, $310.70 is our market value. Our average cost is about $147. 3M makes up 1.42% of our portfolio. Today we're up $8.28, or 2.7%. Total, we're up 16.15, up about 5.4%. Then we have Walgreens. It's a dividend aristocrat, closed at 40.81 today. We have 6 shares. I sold Disney and I bought Walgreens with it. Our market value is 244.86. Our average cost is 39.92. 1.12% of the portfolio is in Walgreens stock. Today we're down 72 cents. Total, we're up 5.37, up 2.24% on Walgreens. Then we have Exxon Mobil, closed a dividend aristocrat. It closed at 43.84 today. We have 84 shares of Exxon, about $3,700 of market value in Exxon Mobil stock. Today, our average cost is $53.20. It's about 17% of the portfolio. Today, we're up 31.08, about 0.85%. Total, we're down 7.86, down about 17.6% on ExxonMobil. Then we have Aflac. It's a dividend aristocrat. It closed at 35.55 today. We have 1 share. Market value is 35.55. Average cost is 35.75. It makes up 0.16% of the portfolio, which I'm a big fan of Aflac. They're a dividend aristocrat. They've boosted their dividend for 25 years at least, and their payout ratio is really low. The dividend's 28 cents per share, which isn't phenomenal for 35, almost 35, or almost $36 that I have to pay. But I do like the dividend growth and how low of a payout ratio it has. So that means it has plenty of years to keep pouring that dividend on. So today we are up 49 cents. Total, we're down 20 cents, down 0.56%. Then we are on, that closes up the portfolio. Then we continue on to the watch list, and all I do for this is I say whether or not I think it's a buying opportunity with the price and where it's at. At $39, I would buy Leggett & Platt. At Genuine Parts at 92, I would buy. Pepsi at 136, I would buy simply because I'm a fan, but my $15 is not there. So generally I would say no, but I love Pepsi, so I would buy it. Walmart at 129 is not low enough for me to buy it yet. Kimberly-Clark at 155, I am not touching. Colgate is near its 52-week high, but it's such a cheap dividend king price-wise that I would buy it because I can buy 10 shares with the amount I usually put into the market, so I'm willing to overlook the price there. Same with Procter & Gamble at 132. It does not offer me enough upside from its 52-week high, but I want the stock, and it's one of those that I'll just initiate a position in, a small position, and I can cost down average whenever it drops. Caterpillar at 134 it definitely has enough upside for me, almost $20 there. SX Property, anything at or below 300, I'm buying. Clorox, I'm not touching with a 10-foot pole because it's at 137. And its 52-week high is 39, so it's $2 off of its 52-week high. The difference between them and Procter & Gamble is it is $100 difference. I can show you real quick. Yeah, it's $100 difference between them. So me being able to buy 3 shares of Procter & Gamble, I'd only be able to buy, about 6 shares of Procter & Gamble in a month. I could only buy about 4 of Clorox, so I can't really buy in bulk with Clorox like I could with, say, Colgate or Procter & Gamble, so Clorox is not a buy for me right now. McDonald's is a buy at or below 200, so it's below 2, so I'll take it. American States Water, I added this one because they are a dividend king, and I think water is definitely not going anywhere. But at $76.64, it is definitely a buy. I have $20 of upside. Then we're into the growth stocks. I switched out American States Water for ED because I like water more than I like electricity. Both of them are needed, but I like water better. Then we're into the growth stock of the portfolio, that portion. So I decided to add, so I have 25 dividend stocks, and then I added 5 stocks specifically for growth, companies that I like, that I'm a fan of, and that I really do want to own. So first on that list, of course, is Disney. I know I just sold Disney, but I'm looking at it from a different lens this time. So before I wanted it strictly for the dividend growth. Here I'm looking for only appreciation, which of course, if you watch the channel for longer than 4 days, you know that I owned Disney a week ago, or like 4 days ago. Therefore, I had an average cost of like 112, so I would look like an idiot now because I sold it, but I'm okay with that. I'm a big fan of Disney. I didn't want to sell it in the first place, but it didn't make me passive income how I wanted to, or how I wanted it to, so I sold it. But it will be coming back as a growth play in the portfolio. Then Berkshire Hathaway. This is probably my favorite growth company. I love it. It's run by Warren Buffett, Charlie Munger, two of my very favorite investors. So I will be having a pretty big stake in Berkshire Hathaway. But in the overall portfolio, the goal is I wanted originally I wanted 50% in Dividend Aristocrats, then 25% in Dividend Kings, and then 25 in Aristocrats and 25 in real estate to make up 100%. Now I'm thinking more of I still want to have 50% in um, 50% in Kings, then probably about 20% in Aristocrats. So that will make up 70, so 80, 90, 100, so 30, so about 15 left in real estate and 15 left in growth, which means that I'll have Realty Income, Essex Property Group, and McDonald's all at 15% combined, so about 6.4% of the portfolio in those, and then 6.4% of the portfolio in each one of these growth stocks. So that's the goal for right now as of the allocation. So Disney, Berkshire Hathaway, because they own so many companies, and I'm such a big fan of the people who run the business. Then Facebook. I'm a big Zuckerberg fan. I use Facebook all the time. I know a lot of people use Facebook. I use Instagram a lot too, and then they have other apps that they have not monetized or put advertising on that they could make a lot of money off of. Then Apple. I'm a huge Apple fan. I plan on buying shares when they split if I can afford it. I've been an Apple fanboy. I've had iPhones, iPads, just iMac, like everything. I'm a huge fan of the Mac. That's what I edit my videos on. So definitely a big fan of the Mac. And I just think that their consumer products are amazing, and the services sector is really what I'm investing for because I see the growth and the potential in that sector. So I'm a big Apple fanboy as well. Then we have Google. You can't go wrong with Google. Biggest search engine in the world, huge advertising platform. They own YouTube, so they own the biggest media sharing platform in the world. So definitely, and I post videos on there, as does everybody that watches YouTube videos. So I'm a huge fan of Google. If I had to rate them based upon how big of a fan I am, um, Apple would actually have to go first. Then it would be Disney, then Berkshire, then Facebook, then Google. So Apple's first, then Disney, then Berkshire, then Facebook, then Google. So I did switch it up a little bit. I do want some growth in the portfolio, and I'm too big of a fan of Facebook, Berkshire, Disney, the growth stocks that I am a fan of. I want them in my portfolio, so I will own them eventually. So we're going to have 25 growth stocks from here on out and 5 straight growth stocks. So you will be seeing Disney back in the portfolio. Anyways, guys, with that, I'll wrap up the video. Thank you so much for watching. I know I changed it up a little bit. I want to throw a corkscrew in there, see how you guys handled it. So we're going to have 25 dividend growth stocks, which is going to be the primary of my portfolio. Like I said, about 50% in dividend kings, then 20%, so 10 for real estate, 10 for aristocrats, or 10 for aristocrats, 10 for real estate, which would make 70, and then the rest would be 30% growth. So that's where I'm at right now. So anyways, guys, I'll see you guys in the next dividend investing video. Take care, and I'm excited to add some growth to the portfolio. Remember to hit the subscribe button on my YouTube channel, That Dividend Guy, and when you do, hit the bell notification so you don't miss any stock market news updates. I've done IPOs lately. I've done stuff on Apple and Microsoft. I've made videos also on my portfolio updates, so I've got plenty of content coming, guys. I've also done a couple videos on dividend cuts as well, so trying to help newer investors out any way I can. So just trying to provide more value because I have a lot more time on my hands due to the car accident. So thank you so much for watching, guys, and I'll see you tomorrow with another portfolio update. Take care, guys.